Good morning, everybody. This is Dennis Wilborn with the Active Trend Traders. Welcome to the How to Make Money Trading Stocks webinar that we do every Friday at 11 o'clock Pacific time. Join us today from Dallas is Mike Traeger. Mike, how are you?
Hi, good afternoon, good morning, depending on wherever you're at.
Yeah, I know. Like it's only 9 o'clock in the morning here. I'm really not looking forward to the second Sunday in March. That's when we go back to daylight savings time, and my day will start, rather than at 3:30 in the morning, we'll starting at 2:30 in the morning to be up with the market.
Yeah, it seems to be starting pretty early this year, doesn't it?
What's that?
Daylight savings time pretty early in the year this year, it seems.
It does. I'm not sure what's going on with that. So let's get going. So, hey, I just want to bring everybody's attention and check out our new logo for Active Trend Trading. My son Brandon Wilborn has designed this logo and little emblem, and he is still working on it. But this is a model of what's going to be going on, so we're beta testing it. So I want to remind everybody that all the materials we do provide are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Michael is not with us today from Switzerland. I hope everything is okay over there. But knowing Michael, he probably went skiing today because he does it a lot. Does a lot of those vacation things. Here's a little bit about my background, who I am. Our motto with the Active Trend Trading is clarify, simplify, and multiply, and we work on that for our members on a regular basis. I'm a big proponent of training. I think that and we have done an excellent job with Active Trend Trading over the, from the time we started Active Trend Trading up, providing weekly training to premium members. And this week we're going to be talking about stop making dumb trades. And it's going to tie back in and with a review of everything that we've learned over the last, I would say, 4 to 5 months. We have been covering just the basics, and everybody has a really great foundation now to push forward. Excuse me, just a second. So again, this is provided for premium members, both in live sessions on Wednesday evenings, and they can always go back and look at the recordings of all the videos that we put together over the years. So Mike, let's get into a discussion on what's going on with the market. The markets this week have pushed up to new highs, and my question is, are we there yet? Now, the there I'm talking about is the there that coincides with the historical norms that we've been keeping an eye on. Haven't had anything to, well, up until this week, hadn't had really anything to kind of say, okay, hey, we may have reached the service ceiling with this particular market, and it's time for a pullback. But S&P, new highs, and it's holding up very nicely, but I walk away with a question mark moving into this weekend. NASDAQ new highs, is it going to go into a pause mode or more? And then Russell itself broke out this week, and but it's pulling back to a level of support. So my questions going into next week are, if the historical norms kick in, will they kick in for a pullback soon? And the counter to that, of course, is optimism is still exceptionally high, yet the markets are very overvalued. Now, Mike, I know you did a wonderful article about volatility and about biases within the indexes, so that basically brought you away with a conclusion that why it's not a great idea to short the market or short the indexes. So are you seeing any cracks in the armor of the market other than being overvalued and that kind of stuff?
Well, historically, traditionally, when you see high levels of optimism and, high levels of confidence and, certain measures of fear and greed way tilted towards the greed side or the euphoria side, it usually indicates that, we're certainly closer to a top than we are to a bottom. And I think we're there now. There's a lot of complacency. There's an incredible lack of volatility, historically low VIX levels. Nobody seems to be, afraid of much of anything, even though there's a lot of, geopolitical stuff going on around the world that isn't, totally healthy. And, traditionally, this is when things tend to start peaking and get ripe for pullbacks. But, I've thought that before the past couple of years, and it, really hasn't happened yet.
Yes, we have. And I mean, we thought we had some really good setups. I think, was it going into 2016, it looked like the things were, put in a nice rounding top, only to be, pleasantly surprised that no, the market took off and powered higher into the end of the year. Now, I think that's, while we can speculate about what might have happened to the market if Hillary Clinton would have been elected, well, I won't speculate. But everybody was expecting the market to absolutely crash if Donald Trump was elected. He was elected. And it didn't crash. As a matter of fact, it went on a really rip-roaring rally right after the election that in some cases, like the Russell went up 20% from just prior to the election up through the first part of December and even climbed higher after that. One of the things that, as you say, optimism, fear, greed, the central banks in some countries in Europe printing money in order to invest in the market. And as we talked a little bit earlier, you said, when we were offline, you were talking about, it's kind of crazy to see everything that's going on, the riots that are going on in France, the Russians off our coast 30 miles, all the saber rattling that's going on with North Korea, China, and all that kind of stuff, and Russia, of course, and the market hasn't even hiccuped. Now,
yeah, that's all very true. Excuse me, and that's what I meant when I said all this geopolitical stuff going on around the world, and usually that kind of the uncertainty that breeds is something that financial markets are traditionally pretty averse to, that kind of uncertainty and that kind of turmoil, but that is not the case right now.
Yeah, it is definitely climbing a wall of worry and concern. So I wonder, at some level, is that offsetting the euphoric optimism? Because there's still a concern with that. Anyway, that at this point is speculation. The market has not rolled over yet. And with that, let's run and jump into the percentage of stocks above the 20-day moving average. As you can see, it pushed up higher into the 72, 73 level, but then it's rolled over the last couple of days. Got a real nice drop yesterday. And so as this was going up, making new highs for the year, then the S&P, or in this case, as represented by the spiders, was also pushing up the new highs. And so that kind of ended a little bit of our negative divergence between the stocks on the NYSE, not participating in the rally. They seem to jump in and get in with the NASDAQ, the S&P on making the run. And as we saw, and we'll take a look at the chart of the NYSE when we're reviewing the stocks and the charts of the indexes, just to see, did it break out to make a new high? I don't know. I know the Russell did, but we'll take a look at that. Nothing really to report here. Again, just as a reminder to people, why Mike and I look at this. We look at this because it gives a really good initial indication. We use it for a standby alert with our early warning alert services, but it's typically, gets our attention when it gets down here below the 30 level. And as you can see, we haven't been down there since November. Then it went on a big spike run. And then it's just kind of, and then we've gone into this kind of mishmash on the NYSE that corresponded with the sideways range-bound move on the Russell. So anything we see here, Mike, that gets you excited?
No, it would take more than what we see here to get me excited.
Okay. So as I said, the other good thing that this particular chart is good for is it really pushes the person to be patient in waiting for the larger moves that happen each year. So as of about 9 o'clock this morning, here's where the markets were. Everything is up for both the year and up from above its highs from last year. Active trend trading also has jumped up, and we keep building. Since we continue to sell premium on Strategy 3 on a weekly basis, we intend for this to continue building up. Now, we started the year, usually we start the year with $100,000 in this account. This year, because we carried over some positions, turned out to be, we started this year with a little bit over 116,000, but we did the breakout of how much we allocate to each strategy based on this 116,000 versus the 100,000 that we normally do. It just worked out that way this year that when it came time to rebalance everything at the end of the year, guess what? We still had open positions that we had to carry forward into the new year. Not a problem. Let's take a look at the SPX. A couple of things I like on the SPX. Short term, okay? We are extended, clearly. We've got the TSI on a daily basis turning over and apparently going to cross. Now, this doesn't mean it's going to basically fall hard back. Look what happened the last time it crossed, right here. We just basically kind of went sideways to down slightly over a 2 to 3 week period until we got back down to, guess where? It reverted to the mean, pulled back to the 20-day moving average, and then launched from there. Since this move in mid-December to the end of the year, the 20-day moving average has been the moving average that the price actions has respected. Will it continue to be that way? We don't know. Momentum on a daily basis is also turned over. As we can see, on a weekly basis, though, we have pushed up. We have resistance up here at the 2350 level. The True Strength Index is popping back up above the plus 50 level. As I showed the guys on Wednesday night, if you use this TSI indicator, go back in time and see what the markets did. Okay, one, where are historical highs? Well, up here about 63 to 65, 66. That tends to be as high as this particular indicator gets. When it gets that high and rolls over, what tends to happen in the markets? Well, going back to, this is 2012, we get a nice pullback into the moving average or down to the bottom of the, in this case, the Keltner channels, and a rebound. And each one of these upward moves off of the TSI turned out to be a pretty good trading opportunity. And so at this point, what are we looking at? We're just pushing up to new highs. The market is pushing up to new highs. Remember that even though this indicator hits a new high, it doesn't mean that the price action on the index is not going to push higher. But if it does push higher, that's where we start looking for these areas of negative not negative resistance, but negative divergences, like we see here and here. and that's when the market would basically do a sell-off, normally after the negative divergence. So at this point, again, you can use that for homework this weekend to kind of go back and say, okay, what are the, where is this likely to run into resistance for the index, and what does the price action normally do when it does that? That's a good exercise to do on a weekly basis. Anything here on the S&P, Mike?
If you compress the weekly chart a little bit, I know you just expanded it a bit. If you can go back and compress it.
You mean show more time?
Yeah, so you're showing more time on it. There you go. You can see on the weekly chart, and you'll probably have to draw some lines, Dennis, so that everybody can visualize it.
I can
sort of a megaphone top that has developed. Well, we don't know if it's a top yet or not, but a megaphone type pattern that has developed over, oh gosh, this goes back, a couple of years now it's taken. And I don't think, we've talked about megaphone patterns before and what their implications could be. I don't know that we need to go into that right now. People can certainly read up on it. It usually has bearish implications. And since you're asking me for other observations, that's what I would point out.
Yeah, megaphone, as Mike said, the megaphone tops basically have a bearish connotation. And so that's what's shaping up. Is that what's going to, happen from this point? You can also draw this another way. You can basically just lay in a line across here and just take these two lows here. And so there is implications of that's what's going on. But at this time, has not really done any reversals to the downside. But yeah, go to Investopedia and you can look up megaphone tops. And so the other thing I'll remind everybody that look at this. I mean, on a weekly and a daily basis, we are getting extended away from the means. That's the moving averages, the 820, 50. At the same time, the 820, 50 are in gear to the upside. That means they're all stacked and pointed to say, hey, I want to go higher. NDX similar. In this whole run that started on the 31st of January, where we pulled back into the 8-day moving average and then rebounded, have had no real reversal candles or signals during this time frame. A little bit of a spinning top on yesterday, but it's recovering from that very quickly. You can do the same exercise with the True Strength Index on both the daily chart and the weekly charts to see, okay, where does it tend, what level on the oscillator does it tend to stop out? Yeah, Investopedia, real good resource, Bob, to go and go check things out. Wealth of information there. Do you use Investopedia, Mike?
Occasionally, yeah.
Yeah, I mean, not all the time. So, again, both of these extended a long way away from the moving averages, and one would anticipate that if we, let's just do one quick thing here, Mike. I see something I want to highlight. If we take the low, swing low to swing high, which is approximately there, and we move this, activate, and we move this over to where we got the last swing high to swing low. If we are looking at symmetry in the market, look at that. We are, the current run that it's on has almost equaled the run that was preceding it, the longest run preceding that. So it's just about there. We can do a couple of other, matter of fact, if you look over here, it has made that. Now, there's other people out there in the market that are watching that kind of information, and when they see that, you know, symmetry has been met, oftentimes the institutions will say, okay, let's take some off the table. We've had a healthy run. Let's start selling this to the people who are all excited about this run, who don't want to miss it. So they sell their position, and then it pulls back, and the people who just bought wind up being not happy with their decision. Isn't that interesting that is that much of a the symmetry on that move is pretty much right on.
Yeah, it's interesting. I think it's just a little bit concerning how quickly it has happened, and the near vertical ascent of the rally here since, really since November.
Yeah.
And yeah, that's going almost straight up.
Yep.
But I mean on the weekly chart. I'm sorry, I should reference what chart I'm referring to.
Yeah.
And you know, occasionally I use the word unsustainable when I see things, and this is an unsustainable move.
Yeah.
Although, again, anybody who goes back and does a little bit of reading or studying about hyperbolic markets or bubbles, it is very common when the bubble is getting ready to burst and the hyperbolic portion of the move is getting ready to turn over, that you will see a nearly straight up advance of this nature before it starts to turn over and correct itself. And I'm not saying that that's what's going to happen here, or that it's imminent, but it certainly kind of looks the way those things have looked in the past.
Yes, it does. And so, as you said, we can't say it's imminent, but, you know, there's a few clues that are starting to show up to say, okay, we may be done with this run. You know, I'm not saying it's going to be, because at this point, the way I want to treat all the indexes is we are in an uptrend. I want to watch for the pullbacks. Is it at a buy? Is it at a buy position right now? No. Would it be when it got down to the 8 or closer to the 20? Yeah, potentially. That's where we would plan our trades for this. Let's look at the NYSE real quick. And the answer to that question is yes. It broke out to a new high this past week, and is also, you know, working on, you know, we get a hanging man yesterday, a little bit of a pullback today, still well extended away from the moving averages. And here's where, you know, I think it's a really great idea to just lay in here, find your most recent swing high, draw in a trend line, or a horizontal trend line in this case, to give us a level, and watch for this pullback. And when does this particular trade become, you know, when does this index become interesting? Well, it becomes interesting when it gets back down here around the 8 or the 20 and or this level at 11,346. So at this time, Mike, you know, not seeing anything here that's saying, hey, we're going to, you know, jump out of this. And now that the NYSE is also in rally mode, you know, this bullish market looks like it may continue. It hasn't shown to give us any indication that it's ready to stop, other than, you know, all these is showing us that, okay, we may be getting ready for a pullback, so stand by for that. Russell. Again, Russell is acting well. It broke out earlier this week and has pulled back and actually tested the breakout level at 1381 to 1388, has tested it the last 3 days in a row. That level held. A little bit of a If strength continues to pour into the Russell, look for this indication on the TSI to basically just be a squeeze on the TSI and then a continuation up to the upside. The TSI has rolled over a little bit, went from 36, 37, they're back to 36, and so for the day it's down from what it was yesterday, but hasn't really, it hasn't, it's not telling us, hey, it's time to jump on this to the short side. If anything, looking over here on the weekly chart, what we have going on is something very simple, is basically momentum on a weekly basis is kind of flat, just going sideways. Same thing on the True Strength Index, although it has broken back, the short period is broken above the long period, so we do have a TSI cross. And then when it crosses here in the middle, it tends to be not as significant, as strong as the ones that happen here, but we still want to pay attention to it because it does show that there's been a shift in momentum to the up, well, depending on the way it crosses, either to the upside or to the downside. What do you got here on the Russell, Mike? Mike? Mike said he wasn't going to be with us very long, and so he has dropped off. And so, anyway, that's what we're seeing going on here. If you have any questions, just feel free to ask them. I'm glad Mike was able to join us. He is. Okay, let's go on back over here. So I want to remind everybody that I am still in the process of waiting for the potential moves on the S&P. Are we seeing the first indication that we've reached this point on the S&P with the anticipation that now we would get a little bit of a downside break, a pullback? This is again the historical seasonality of the S&P going back 59 years. The blue line is the track of the S&P in a post-election market, and there tends to be, honeymoon period of the new president is over, although I'm not sure that we had a honeymoon time with President Trump. But the market is, the market has had a honeymoon time with him for sure. And so wait to see if it, is it going to shape up to be like this? This is extended it this way just a little bit, so it may be peaking over here toward, a little bit out the second half of the month, and we'll see if we get a sound pullback. I wouldn't, again, I would not be interested in taking the first part of a pullback, but if you get one of these things where it drops like this, comes back up, that pullback up to a lower high, and then a reversal off of that would be our indication to get a little bit of downside exposure as you go. At this time, not ready to do anything on it yet, because who knows, if the action that the administration has planned regarding taxes, regarding continuing to roll back regulations to make the environment in the United States more business friendly, who knows? This particular pattern may not take shape. We may get a little bit of pullback and a bounce going up. So at this time, trade the pullbacks until its pullbacks stop working. So path of least resistance. I'm in the camp that basically says that until we are in a strong uptrend, and until that uptrend is reversed, I will be looking to trade here. Longer term, one could make a point that the overvaluation on the indexes is such that the inertia of that will eventually pull the markets down. However, there is no indication at this time that that is going to happen in the near future. For right now, any weakness will be looked at as a pullback until it proves that it's not. So any question on that? Okay. Okay, here's where we're sitting as of right now with what we booked in profits for the active trend trading going forward. Looking forward to future presentations. This month, the BAM is meeting, the Bay Area Moneymakers is meeting in San Jose on March 4th. Lyle Wright, who is both an IT guy, but I think his heart really lies in, he likes to be a coach, a mentor for young athletes, and he's done, a great deal of study on athletic psychology, competitive sports psychology, which is so closely tied to what we need for trading the markets. He will be given a presentation on overcoming fear and other roadblocks in your trading. Great topic. So if you're in the Bay Area, you can, we advertise this particular meeting on the Meetup website for the Bay Area Moneymakers. Then on Wednesday night, we're going to do Stop Making Dumb Mistakes. We're doing a whole bunch of updates currently on the site, keeping it updated, but also providing a few things like the live Facebook market updates. We're doing about 2 of those a week. And so I'll be doing one probably this evening once the new IBD 50 comes out, and we have and we do our sort on that to find out what our strong stocks are coming up into next week. Okay. So just as a reminder, the Active Trend Trading System, our motto is clarify, simplify, and multiply. We try to keep it extremely clear and simple. We base our system on the 5 pillars of active trend trading, which is we identify what to trade, either top quality IBD growth stocks and or top-notch ETFs, and we explain when to enter, when to exit, what strategy we're going to use, and what to expect. I'm a very firm believer in that everybody needs to have a system in place and learn how to utilize that system. First, by trading just straight stocks and index ETFs. I've said it many times, and I mean this sincerely. I really wish when I first started trading that index ETFs would have been available, but they were not. And I think that for somebody who's just learning how to trade, the index ETFs and a few of the industrial ETFs are really great because, one, you don't have to worry about earnings. Secondly, news can cause some gaps and all that kind of stuff, but you can just focus on pure technical analysis and learn that, and then it's so translatable over to individual stocks when you start trading growth stocks. So system here first, and then we allocate a small percentage of our portfolio, our investment capital on option strategies, and a little bit less than 30% of our capital is dedicated to Strategy 3, which is a wealth and income, basically a weekly income generating strategy. Here's how that strategy is done so far this year. Now, the gains here, they are reflective of both what has been collected in premium on a weekly basis, plus the residual value that is in the long leaps that we have been trading. So since we're a little bit, month and a half into the year, I'm quite pleased with how this is going at this point. So that basically is going to cover it. We got some time left over, we can look at some individual charts if you would like. So, keep growing the egg. I think 2017 is going to be a season of exceptionally explosive growth for everybody involved. And here's some highlighted other places you can find us with Active Trend Trading, facebook.com/Active Trend Trading. That's our Facebook presence, and twitter.com trend_DWW. So at straight up 12 noon Pacific time, we'll get into the final hour for premium members, where we talk about, where we look for potential trades and also try to sell premium during that time frame. And as most of you know, I am not a big promotion person, but if you are watching this webinar, one of the recordings, I do want to invite you to at least try out the Active Trend Trading. For those who join us for these webinars, we have two services. One is Active Trend Trading membership that includes all the training and all type of stuff. We offer it at 40% off of the regular price. There's each of the members gets about $400 worth of actual benefits from this membership. That includes all the training, that includes the alert service that goes along with it for those who want to parallel trade, and then the early warning alert ETFs. Again, it is marked down also from what its regular price is. You can find both of those at the website identified at the bottom of the page. So I'm going to conclude this portion and take a look at a couple of stocks if you guys want to. And so I have got 10 minutes to look at stocks. Okay, NVIDIA. The first question is on NVIDIA. Okay, now Phil, NVIDIA has fallen off of our list right now, but simply because it fell off the it didn't reach the top of our sort that we do on the IBD 50, but it is still the first stock in the IBD 50. And as we look at this, NVIDIA, upside, downside, okay? We've initially put it on the watch list over here. We liked it, around the middle of the month in January. We get the cross back up with our TSI, which gave us a trigger to get in here. The position that we put on never filled, and so we missed out on that particular move on up. Now, what do we have going on right now? Well, something very interesting. One, NVIDIA is coming down here and bouncing off of the 50-day moving average. That's a good thing. It is putting in what could be a dragonfly doji and or a hammer off a strong support level. Now, this is a support zone more than a level, because it's got support here from about the 105 level down to the 100 level. And so since this is a pullback, it is a pullback within an existing uptrend. But the uptrend in some ways has been busted. Depending on, there's so many ways to draw your trend lines in here. But if we take from this swing low here up through that swing low there, as you can see, that uptrend has been busted. If we go here and draw it across this way, either there or just right there, that little uptrend has been busted. That's connecting these two dots and these 2 points here. If we cross, and so that has been busted also. But we're getting a move now sliding into the horizontal position. What I'll be looking at this one for a potential trade, because I still like NVDA, is I'll make myself wait until I get a tick up on the TSI, and I would like to see the momentum turn back around also. On the now that doesn't mean we're going to actually run back up. Yeah, I don't know where we'll run back up to, because it maybe go back into a real strong uptrend. But we'll be watching it. It's really, really close, but it's not ready yet, because I'll force myself to wait until I get a crossover or a tick up. And you know what a tick up is, right? Is when the value of my TSI the next day decreases or increases, depending on how you, increases from what it was the previous day. And then if I can enter at the end of that day, or I will look to enter the following day. So that's what I got going with NVDA. Did I answer your question, Phil? Yep. Okay, cool. Let's take a real quick look at what's going on. Okay, does anybody else have anything else? Yeah, Bob, you asked about the one contract on the spiders today. It was, I wanted to open one position because I think that there's some overhead resistance with the spiders. I didn't want to do two, simply because I may get a better entry first part of next week to do the second option. When would you think of entering LABU? I don't know, Dorothy. No. It's just when it gives us a good signal. LABU. Let's see, LABU, that's IBB, right? Here's the biotech. Again, it's looking pretty good also. It got its cross back here, a little bit pull back to the 8-day last week, and then it's rallied up from there. LABU should follow a similar type path, with the exception of, and so we're getting something similar. Where would I prefer to have this, though? I would prefer to enter a trade either at the 8. It's in the process of, it is right up against a resistance zone at, around 50, 49, 40 up to $50, and it tested that here, and then it's pulled back. If this little uptrend thing keeps going on here, you can look for a pullback into there. If that uptrend right there is broken, that means we're going to go back down here to the bottom probably. But I'd be looking for a pullback. I would really like to see a pullback into the 820 level. But as you can see here, the 50 just crossed above the 100, and it earlier hadn't really got below the 200. And so the biotechs are trying to get themselves in place for a run to the upside. Okay, I can look at, are they in season? Great question. Excuse me. I don't know, let's take a look. Let's take a real quick look. I keep this particular presentation really close at hand, Dorothy, because this is my seasonality charts. So biotechs. The answer to your question is they were in season earlier from January to February. Now from March all the way through the end of June, it appears as if they tend to go, kind of just horizontally, but then towards the end of June, they go on into a larger move up. So are they in season? I would say that they're approaching a point where they should go into a hibernation season or a planting season for it to build up the momentum to go on the rest of that run. Okay, one more stock. Scott, you've got it. How are you today? Let's see, SBUX, Starbucks. What are we doing with Starbucks? Basically, Scott, I'd want to do the. I know that I would want to do the stock checkup on it to see how it's doing. It's in a kind of a slight downtrending channel. It looks like it didn't like earnings, fell out of bed, came back down to support at the 54 level, has run back up into the support from the bottom of this window, and is currently putting in a shooting star type of formation, which may wind up taking us back down to the 54 level. It needs to break through the support at the of where all these moving averages have come together. And so longer term, let's draw a line across here. Longer term, you've got that going on. You can almost look at it as a downtrending. No, not a down. Yeah, a downward sloping triangle. Where look for bounces off of there, look for resistance off of there. And right now it's right in the middle. A bottom is put in, has a bottom been put in. We will know that when it, absolutely 100% reverses this trend here. It tried to reverse it here. It has put in a higher low, swing low on a weekly basis, and so that may constitute a bottom for it. And so it may also be doing one of these things where it is, kind of put in a big giant cup. This may have been the bottom of that. They look a lot like that, where it pierces down then pops back up, and it may be on its way to move back up the right-hand side. And if it is, how far might it go? What kind of let's give us an idea of. So that's got a potential move back up to the top side of about 12%. This is one of the reasons why I kind of stay away from Starbucks, is because there's just not enough oomph in the moves that it does. So, okay, guys, that's it for today. And did you have one more, Scott? IP International Papers. Again, this is one of those that I do not follow this. I'd want to do a stock checkup on it just to see what kind of, what its fundamentals look like. But it looks like, hey, it made a run. It popped up here and is pulling back. Where's it going to stop with this pullback? That isn't quite a hammer last week. Right now, it fell below the 50, came up and tested the 50, and now is reversing down from the 50. So it looks like it may have some more falling to go. Okay, folks, that's it for tonight. For today, thank you so much for joining us. And if you're going to be seeing us on the final hour, I'll be on that most gauche. So God bless everybody. Have a wonderful weekend.